What's going on, everybody? My name is Steve, and I am the host of the Frugal Expat. Today is a great day because we have a great guest on here. He is coming from Southern California. He has broken records in cross country, and his portfolio is sitting over 400,000. He has created his own great YouTube channel that is skyrocketing. When I started watching, it was 16,000 subscribers. He is close to 53,000 subscribers on YouTube. He has created the ETF Academy, interviewing CEOs of not only just one big company, as in Neos, but Roundhill, Defiance, Tap Alpha, everyone. And the cool thing is, he has joined me today. His name is Marcos Milla. And if you guys haven't heard about him, he is a great person to follow, a great YouTube channel to watch. And I'm going to bring him up here. So we're going to talk to him, ask him some questions, and in the chat, ask him some questions too. And if I miss your questions, throw me a super chat. I'll throw it on the screen so I can definitely see it. All right, let's get to it, and let's talk to Marcos Milla. Here we go. Hey, Marcos, how are you doing today?
I'm doing well. Thank you for the intro.
Oh, no problem. No problem. The cool thing is I've got it off to my screen, but I kind of memorized it, and I was hoping that I didn't miss anything and kind of built you up just a little tiny bit, right?
Yeah, just a little bit, just enough.
So how are you doing today? How's the weather? I mean, you're in Southern California, so I'm guessing it's pretty good weather. Is that right?
Yeah, it's a little rainy. I'm doing well. Markets are doing all right. I'd say if you're an index investor, you're just fine. Like majority of my money is in the S&P, but if you're, I guess, in software and tech, you're probably not having the best day. But it's been good, man. I can't complain.
Oh, that's great. That's great. Yeah. I'm in Melbourne, Australia. So it's 4 seasons in a day. And today is kind of 4 seasons. I mean, I've got my long sleeves on. Just 2 days ago, I had my short sleeves on because it was so hot. And you just never know what's going to happen. It's like someone said that Australia is like, so Sydney is like LA. Melbourne is like San Francisco. And so you just never know what's going to happen. But yeah, I am glad you joined us today. I'm glad that I get to interview you, and that means later on, a lot of other people get to watch this, and so that's cool. And then we'll have a plug for you to talk about your channel and your investment strategy. But first, just let everybody know, like, who are you? Like, what do you do, and what are some things that you just want to tell us about?
Yeah, so my name is Marcos Milla, 25 years old, turned 25 last November. So like 4 months into being 25. By myself, I just love ETFs and I make ETF content a lot, whether it's myself or whether it's interviewing somebody, basically everything ETFs from dividend and cover call, growth, index investing, that's pretty much my passion. And I just literally do that probably like every single day. So that's literally pretty much about it. And I invest a lot of money. I think I invest $15,000 a month. Dude, I'm addicted, bro. It's a lot of fun. So
that sounds awesome. I mean, man, $15,000 a month. Yeah, I think I was talking to you earlier, and like I was watching a podcast, and it said 6,000. And when I emailed you, and you said 15,000, like I told my wife because she was sitting beside me, and I was like, this guy's investing 15,000 a month, and she's like, "Oh, that's cool." And I was like, I need to find some other people to talk about ETFs with.
Yeah, it's crazy too because when I first started investing, it was $5. That was like my very first investment. It was VOO, $5, and then it just snowballs from there. But it's definitely really unique when people ask like, "Oh, how can I invest just 1,000 or 2,000 or 3,000?" And that's kind of my biggest push is like dividends are cool, cover call premiums are cool, but if you can make a lot of money outside of your investment portfolio, then use that because that's going to make you all the wealth possible. But for me, it's surrounding myself with a lot of really awesome people. Most of them, if not all of them, are entrepreneurs. My best friend's an entrepreneur. He, makes like 40 grand a month. Other friend is an entrepreneur, makes a lot of money. All of my business people from, whether it's startups or ETF business people, they make a lot of money. So that's literally all I'm surrounded by. And so I just compare myself to them and I'm like, okay, if I'm not making X amount, then I'm not keeping up. But it's definitely a really good position to be in.
Yeah, that sounds awesome. It sounds like a group of my friends. Like I've got like a computer engineer, another engineer, a guy that he's not entrepreneur, but he runs what's called like a super fund, but he doesn't really run it. He is the major accountant, so he makes a lot of money. He just doesn't. He just he lets them invest his money for him, if that makes sense. And
Yeah, there we go.
yeah, and then all these people are like, yeah, we're like buying houses. We go to Japan like for like 3 weeks, and I'm like, oh, I travel too, but but I don't have as much money as you guys, but I do it a little bit more frugally or use my points because credit card points, man, they it's like the way to travel the cheapest and the best.
Yeah. I would say I'm pretty frugal. Like I don't really spend much on credit cards or something, but because all my money, most of my money goes towards the portfolio, right? Or just, saving it and investing in it, whether it's the startups or my portfolio. But occasionally, you got to go on a date with the girls. So that's that's
Oh, I understand. I understand. Like my wedding anniversary was last week, and so I was like calling my
can't cheap out on
in-laws.
those things.
I was like, I gotta go out to dinner with my wife, and they're like, all right, we can watch the kids. I was like, cool, cool, cool. And then we had, a couple of drinks, some good food, and then I look at the bill, I'm like, well, it's worth it because a good date with your wife or spouse or girlfriend or whatever is it's definitely worth it.
Exactly. Happy wife, happy life.
That's it. That's it. All right. Yeah. Man, you're so young. I mean, I think to myself, I'm like, I started investing when I was 30 years old, and you are 24. Is that right?
25.
25 years old. And at what point would you say you thought about or even started to invest? You said you started putting $5 into VOO, and now if I look at your portfolio, we'll show it later, is like at 166,000. Is that correct?
I think
Or
right
is
now market went up today, so probably like 168, something like that. So,
yeah, but I mean, like you started low, you're 25, and you started from 5 to 15. What started you on this investment journey, if I can ask that?
yeah, so I started investing when I was, I believe, 17, but it was like, $5, and then it was like 10, 15, 20, so not a lot of money. But when I was in college, I was what, 18, 19, 20, 21, 22, investing a little bit more money. So it was basically my dad. So whenever I worked, so my first job, I worked at Tilly's. It's like a uh, kind of like a clothing store, minimum, making not a lot of money, right? And then next job, I think I was working 99-cent store, so it was like a grocery store clerk, and then doing like tutoring in college. Worked at busing at PF Chang's, and then I was working at Domino's Pizza. So that was like my last minimum wage gig, was like Domino's, and then I worked some valeting too. But the whole time I was investing as much as I can into QQQ before Triple QM was out, or even if it was, I just didn't know about it. So the Nasdaq 100, VOO, and then that's pretty much it. And of course, now I kind of broadened a little bit. SCHG's in there, VTI was my 401k, and then some other funds as well. But yeah, so just consistently putting a small amount of my money from my paychecks into my portfolio. But when you're making minimum wage, I don't know how much minimum wage was back then. It's not a lot of money coming out of your paycheck to even invest. So once I got my job out of college and learning how to make money and how business works, that's when the portfolio really jumped in value, because I was able to, of course, save a lot more, invest a lot more. And now the portfolio is at over $400,000 sitting right now. So hopefully by the end of the year, it could be at, I want to say, I could probably be like 550. I don't even project like growth. I just project like how much money I could like put away. So I don't care if the market goes up. And then next year, this is like super ballsy, but if the market has a good market by like 10%, plus like how much, income I could probably bring next year. I want to stay like 900. We'll see. So I want to be a millionaire before like 27. We'll see.
Wow, wow, wow. Yeah, I think Gary, one of my subscribers, was like, "You're gonna be like financially independent by 30 or a millionaire by 30." And and I was like, "Well, actually, probably a little bit quicker, right?"
Hopefully. But yeah, man, it's a lot of work. Like when I was out of school, working so much, I was working a lot. So growing the channel and working too, I was probably doing like 100 hours weeks, like easily 100 hours a week. Like that's, you're obsessed with content, with working, with investing, with meeting new people, with networking, with juggling a lot of things. And that's kind of like my recipe for success to making the portfolio the way it is, because I've only been in investing for, we could say, what, 8 years, but really we could probably say like 4, because you've only been, I'd say real investing when you're putting like at least $500 a month away. That's kind of like when it kind of gets real. And because $20 here, $30 there, $5 a day, it's great for content, right? But you don't really see a needle, you don't really see a change unless you're investing a lot of money. um so when I started investing a lot more money, that's when, in working a lot, that's when I saw my portfolio really change. And of course my income grew because we're working hard, meeting new people, and eventually if you're working a lot, something's got to work. It's if you're working 100 hours a week plus, like you cannot like not show for it. So I'm super glad I did that, and I don't do that as often anymore, but it's still like probably like 60, 70 hours a week.
Now, did this mentality kind of come from your athletic days? Because I probably haven't mentioned this. Maybe I did mention it in the beginning, but you broke a cross country running record at your school, a 23-year-old cross country record. Do you think that from your university days or from your college days, you this kind of strive for excellence, this strive to kind of build and even like work 100 hours days comes from kind of that patience and discipline from your athletic days? Is that part of kind of that drive, or is something else driving you? Because you know I gotta say, like my brother, he was a soccer player, and man, he was like eat, sleep, play soccer, eat, sleep, play soccer. Even when he was injured, it was like eat and sleep, and so he gained a little bit more weight. But then when he back went to soccer, he dropped it because he was back to running. So does that like kind of drive you? I mean, that kind of that patience and discipline.
I don't know. Like I've thought about that for a while. So I think in high school, I love cross country. I ran cross country and track throughout my whole high school and college. I once again in high school did the same thing, like broke a lot of records, won a lot of races, same thing in college. And I had a 5.0 GPA my last couple years in high school, 4.0 GPA in college, whatever, like not every quarter is a 4.0, but last couple years were. But basically, I don't know. Sometimes it's just like I just like either to win stuff, or I just don't want to be an average person. So when my whole like athletic career came to an end, I remember my dad was like, "All right, the real sport is business." And so I was like, "All right, like I have no like there's no dopamine from like anything else anymore because I can't run or do track." My dad was like, the real sport is like once you graduate college, you have like 40 years of working. And so, if you're gonna be, he's a consultant, and he wanted me to be. He didn't want me to, but my brother's a consultant too. So what the hypothetical or rational thing is, okay, Marcus is going to be a consultant. And I was like, no, I want to be in finance. But I didn't even know what finance really was. It's so broad. When someone says they work in finance, I almost like roll my eye. It's kind of when someone says, all right, I'm an entrepreneur, like I live in SoCal, like it's like when someone says they're an entrepreneur, I just roll my eyes too. Because I'm like, you don't even know what that even word means. Like you're not a real entrepreneur unless you're working full-time as an entrepreneur, or you're making like people on TikTok are like $10,000 a month. I'm like NAV taxes, all right, that's impressive, sort of, but depends on your age. But yeah, so I went to work in finance, and then I got into banking. I worked at the Fed, so worked at the Federal Reserve Bank of San Francisco. I don't know how much I could say, but basically did that for a while. And yeah, so I don't know. People ask like what drives me. I get asked all the time. Like I get at this question a lot. I don't know. I just don't want to be average. And I also know that it takes, if you want to enjoy a lot of things in this world, it takes a lot of money and a lot of security. So it's like, okay, if you want to make a lot of money, you have to be either smart, take risks, or know a lot of people. And for me, it's like, I don't know if I'm that much of a risk taker. I would say I'm sort of smart, but not like the smartest person in the room, but definitely knowing a lot of people, like having a good network, be able to talk
Yeah.
and be able to like persuade people. So it's almost like if I knew what I knew now, I was like, why did I go to college? Like I don't even use my degree anymore. But man, I don't know. I just, a lot of things don't interest me. Like I don't really party much or go clubbing that much. Occasionally, you might see my Instagram. I'll be in like, I would think I was in like Cancun the other week, like absolutely plastered on a boat, but that's like once in a while. But I don't know, man. I just like building things, which is like businesses. So like love business. That's like all I think about, and investing. If it's not those two, then it's like friends and family. So
Yeah, that's awesome, man. That's awesome. I think, it's so true what you say. Entrepreneurs, a lot of people can say that, but I think running a business, it's not an easy thing to do. You have to have that drive. You have to have that want. You have to have the vision also to create and be able to risk the 100 hours a week. Be able to like miss things that you probably don't want to miss. Like my wife always tells me, like, Steve, what are you doing right now? It's like, oh, I'm working. Like, just trying to like get things going, like making deals. Like I get up at all hours of the night just have a phone call with someone across the world just to maybe make a sponsorship or something. And it's like I gotta do what I gotta do. And I see that and hear it straight from the way you talk, and it even, man, I feel like running through a wall right now for you. Because you just, it sounds, it's on fire. It's like, oh yeah, let's do it. Keep going, Marcos. You were doing great. But yeah. So when we're looking at your strategy, you talk about you love investing, and I love investing. I love talking about it. And as we look at it, you have been investing into VOO, and this is like your number one investment. Can you tell me, like, and you also talked about QQQ and QQQM and SEHG. Can we go over like some of your philosophy on picking the different ETFs you have picked, and why you stick with VOO, and maybe why you have VTI as well? And I'll even throw on, let me see if I can let's see if we can throw these on here onto the screen. So not, maybe is that the one I want? Yeah, that's okay. So right here on the screen, I've got your Bloom portfolio and your other portfolio, which has got VOO, VTI, QQQM, AUTG, SEHG, and a little bit of some cash too. Can we break these down, and with your kind of your ETF strategy with picking these?
yeah, so we could talk. I'll go like top down. So we have
Okay.
VOO as my top holding. That one is more of like my core. So on like a broad basis, I think that's still like 60. If you compile out everything without the cash, it would still be like a large chunk of my portfolio. I like that one. Core holding, diversified, 500 companies, all market cap weighted. You got pretty much every sector in this whole stock market and the economy. You can't go wrong with that one. That's my top holding. It's always going to be my top holding no matter what. I have a lot of cash. Yeah. I gotta deploy it, man. I gotta deploy this cash. I was gonna buy some stuff today or even yesterday, and I was like, oh, I'll wait for the market to dip a little bit more. And then it just goes back up another percent. I'm like, okay, when this market gonna pop or something? So I'll probably be dollar cost averaging a little bit to that, but that's just getting a good money market yield. I think it's about around 3%. Triple QM is my second top holding. It will always be like that. I like that one. It's the reason why I have triple QM and then we'll just jump up to like SCHG is because people really often compare triple QM as like a pure growth ETF. We could argue it is. I would say it happens to just have a lot of technology growth stocks. It's no means a like screener for growth. If you want to screen for pure growth, you look at AOTG or SCHG. But that one's more of like, okay, the Nasdaq 100 is filled with low marginal cost companies, high growth companies. On average, the Qs have a better growth rate and also a better free cash flow rate than the S&P. So I was like, okay, sweet. This is more volatile, which I like. Hopefully be compensated for that risk to hopefully outperform VOO, but it's something that will have more swings. So it's not the core. So I was like, okay, sweet. I'll have triple Q on there. VTI I have there because my 401k is going to be purely VTI. And at the time, my company I worked for only had VTI as its holding. There was no VOO, there was no SPY-M, there was no triple QM. It was like VTI is the best holding. And then the next thing was like VXUS. So I said, okay, I'll have the fund overlap. I don't care. I'll have VTI in there. So that was why I have VTI, and I don't care because I'm still up on it. It's not like fund overlap is never like a bad thing. It's just you just got to have it. Like if you have VOO, SPY-M, VOO, SPY-M, IVV, FXAX, you're gonna have like the same return, but you're just basically like diversifying issuers. But for me, it's like I don't want to have international in here for my personal reasons, so I have VTI in there. AOTG is on average higher risk, higher growth play. I like this one a lot. I like the fund manager a lot. This one historically has been the S&P and the Nasdaq 100, so I like just pure growth. Don't wait the portfolio by market cap. Wait to buy earnings and revenue and earnings per share. SCHG, I just pretty much talked about that, but the reason why I like SCHG and triple QM combining it is because any given year, one or the other can perform. And honestly, I sleep way better than having two than one. Blossom, if Blossom raises, I think 70 million is their next raise, I would have basically 10x my money. So it turned what 5,000 something to like 60 or 55. So that would have been like my best investment in 1 year. So that's why that's one of my companies I invested in, angel investing. I should have done a lot more. By the time I didn't have like that much cash on me. So I was like, all right, I'll put in like 5,000, whatever, 663. And I really wish I did put more because it would 10x my money. That's okay. That's why I love, I love investing in startups. Awesome. So Blossom is like my down payment. So I viewed Blossom as like, all right, I know how this business works. I know how this app works. I know how they make their money. They had like not a lot of users. I think they had like 100,000 users when they invested in it. And I was like, this is crazy. Like they haven't even expanded in the US. Now they're over like 600,000 users. So I like got on a great time for my private investment. And I wouldn't be surprised if this is like let's say $5,000. It's not, but $5,000 to $100,000. That's like my down payment for my house. So I basically would have bought a house down payment for like 5 Gs. That's probably like my most 200 IQ investment ever. IBIT, because IBIT or Bitcoin's on a bit of a pullback. So a little bit Bitcoin won't hurt. Probably will sell it once it rips back up. And then BTGD is a gold and Bitcoin. So I have like a little bit of money in it, but since it's leveraged, it kind of got effed with Bitcoin. But that's kind of my portfolio. And moving forward, it'll probably be the same thing, if not more VOO, more Qs, and probably more SCHG.
Oh, nice. Now, one thing as I look at your portfolio, one thing you're missing is there's no dividend ETFs.
Which dividend ones? Are we talking about like a cover call one or a regular one?
Either. Because I don't see any covered calls on there either. Maybe my eyes are a little bit old.
Yeah, a lot of people ask me, they're like, why don't you have cover call funds? Like you interview all these people and you make all this content on it, and what you should have a cover call fund. And I'm like, you know what? I ask these issuers all the time if I should have it, and they're like, no. Like it's like don't do it. Like it'll probably be good for a video and for clicks or something, but I don't need it. You know, like I don't even, bro, I owed like 70 G's like in taxes last year. So like I don't want more. I don't need all this dividends for nothing. Like I don't want to generate more taxable events. But when it comes to like taxes, that's a big thing. Whether it's like SCHD, DGRO, FDVV, or even just like the cover call funds, like the NEOS ones or JEPI, JEPQ, or anything else in that realm. I just don't need the cash flow. And if we're taking a look like at a 5-year chart, which only I think the JP Morgan funds could do that, they severely underperform the S&P and the NASDAQ 100. So I don't need like less underperformance, right? I need either the same performance or if not more, which I think that this portfolio could give me that, which I guess it has done that with the S&P, the Qs, the growth and everything else. But you know, I don't think I would ever buy a cover call fund, even if I had like $1 million or even 2 or 5 or 10. The reason why is because I could just sell my shares. Why would I why would I let the other issuer do it for me? Like the cover call funds are perfect for people who don't have too much cash flow and they want cash flow. Like if I already have cash flow from, I probably have like 8 different ways of making money, maybe more. But I don't need like the cash flow. I don't need this out of my portfolio to live on. And I don't plan on retiring for quite a while now. I feel like I'm just barely even getting started. So with the cover call funds, I'd say that it's not even it's more of a personal thing. Like I just sleep better at night knowing that I could just invest in what I invest in. But if we're thinking about like a cover call fund that I would rather own, it's like pretty much if it's not the Neos or the Goldman or the probably the Amplified, those are like three ones I like. Tap Alpha too. I just don't need it, and we'll see how the boosted ones do. So like some of them have like swaps and options derivatives to make the performance better, but we'll see how they roll out. But it's more of a personal thing for me. And if I can sleep better at night doing this, then I could do it. But if people want me to invest in a cover call fund, then I'm like, all right, I'll wait for the boosted ones to see how they do by Neos.
Yeah. I mean, that makes sense. I mean, you're 25 years old. I mean, you still have, I mean, you're gonna have $1 million within 2 years. Well, hopefully. And then at that point, I mean, just continue to do what you're doing. I mean, I know dividend ETFs, dividend stocks, and cover call ETFs are great for those people, like you said, they need the cash flow. I mean, when you get closer to like the 60s and 70 years old, and maybe you don't have the portfolio balance that you need to kind of stop working, that's where a good dividend ETF or even a cover call ETF can help kind of supplement that income. I see with my dad. My dad is always looking for some great dividend stocks. He doesn't actually need the income. I feel like he just loves buying dividend stocks just to add more money so he can have better vacations. I mean, because he's got Social Security, he's got a pension that he hasn't even dipped into. And he's got, I mean, I think his cash flow is like maybe close to like $150,000 a year, and he still works. And so it's like, but it's exactly like you said. It's if you need it, those are options that you can use. And I think that's the great thing about Neos is creating options that weren't out there 5 years ago. JEPI and JEPQ, I mean, just came out in 2020. Well, I think JEPI came out in 2020 or 2019. And I mean, my dates could be wrong, and that's okay. If you guys want to roast me in the comments, go ahead and do it. Make sure to like it and then subscribe afterwards. But yeah, that's great diving into that ETFs and your ETFs, and I think you got a great plan. I wish I had the same plan when I was 25 years old. I don't know what I was doing 25 years old. Huh, gotta think. It's like 15 years ago.
Yeah.
I'm not 40 yet, but I'll be 40 at the end of the year. So it's different lives. Where I am in life is different than you, but what I wish is, I wish I was where you are now, because that makes life where I am now just easier, simpler.
Yeah. So yes, so like things I will never own. Will never say never, but I'm not a huge fan. I wasn't a fan of gold, but I have a little bit of gold with BTGD. I never thought I would own a Bitcoin, a little bit of IBIT, a little bit of BTGD. Dividend stocks are like up in the air. It really depends. You know, I like SDHD a lot, DGRO a lot, and then maybe VYM. And then I will never probably own a small cap fund, never own a mid cap fund, never will own bonds like outright. Maybe international, but it would have to be, there have to be some sort of historic breakout in the US where international is like the next big thing. But for now, it's index approach, VO core growth, you know, NASDAQ 100 growth, and that's going to be the play for the next 20 years or more.
Oh, so you don't like any internationals, I see.
I mean, it could be long in a portfolio. I'm just like way too bullish on US, you know?
Oh yeah, yeah. Well,
And
I'm pretty bullish on the US, but I think I've sat with a VX US for like a good 9 years, and I stopped investing in it, I don't know, maybe in 2019, and then now, like in 2025, it's crushed. And
yeah,
but how long is that gonna last?
we don't know.
I mean, it's just like, it's just in the early 2000s when internationals, I mean, they were doing much better. But then in the last 15, 20 years, man, the US market is just crushed. I
Yeah.
mean, it's, people say like a S&P 500's averaged 10 to 11% for 100 years, but the last 15 years it's averaged like 15%, which is just insane to think about.
But we don't know what's going to happen. So just keep on investing in what you believe in.
That's right. That's right. So I do have a question. I mean, we've been talking about investing. We've been talking about kind of your business, but what got you into making YouTube videos? I mean, and we'll ask some questions based upon that later. But what got you into making YouTube videos? What is kind of your why on continuing to go? And yeah, I want to know, and probably my audience wants to know, because I mean, you're killing it. You're up to 53,000 subscribers. Hopefully by the end of the week.
Yeah. I was okay. So I was in college, in my last quarter in college, we had a class on entrepreneurship, and everybody was making these like super weird tech companies that would never exist. And mine was a YouTube channel that would somehow make like a couple $100 a month or something like that. So that was my goal, is like, okay, I think I can make videos, and I think I can make it a lot better than a lot of other people could. So that Christmas, I got a camera for my dad, got a mic for my dad, bought lights, and from there I was like off to the races. And I just would literally be in with my buddies in college, and all I would do is talk about like ETFs or stock market or stocks, anything in the between those three. And they were like, dude, like you talk way too much about this stuff. Like you should make a video about it. So yeah, started posting, and it's been 3 years since then. So I don't know. I just like talking about ETFs, and it's a lot of fun. And damn, it's been 3 years. I would never thought. I thought I would probably be like quitting by now, but it's like another year where it's like, oh, I gotta do this whole thing again. Like every year, I would tell myself, all right, this year where like I'll pull back more and chill out. And then it's like, no, it's you just keep on making videos, and you have to keep on making good content. So I like it.
Yeah,
I
yeah,
guess.
exactly. I was actually a financial writer and a travel writer, and I think it was in October. I was writing for one website that basically they were syndicating content to MSN, and so they lost basically their contracts, and so basically I was basically out of a writing job, and so I was like, I'll just do YouTube. And for the first 3 or 4 months, I was like, this is hard. I mean, this is this is difficult. Like, I got to 100 subscribers by January, and I started like November of 2024, and I was like, whew. And then I got to 1,000, hitting June, and now I'm like at 4,500. I was like, you know, I'm gonna keep going. I've got the fire. Like I want to keep busting out. Now, that's, I mean, and you're at 53,000. So you have just continued to create different avenues. You've got interviews going on, and is YouTube your full time business, or do you do something else as your main income driver?
YouTube's one of my. It's not full time, but I would say it's full time enough. Because dude, if you're working like 40 hours on YouTube, you're full time. If you're working like 30 hours, 20 hours, like dude, like that's still full time.
Yeah, I understand. Yeah. So is this your main job?
Basically, yeah.
Okay, cool. Wow. That's awesome, man. Um Now, with this being your main job, you have created your media company. Is it the ETF Academy LLC? Is that correct?
Yeah. There we go.
So how did this idea come about? Because I think you like recently, I would say, I don't know how recent, maybe last 6, 7, 8 months. Oh man, time goes like this. I mean, as you can probably tell, how long has this been going on, and where did you decide to start interviewing like CEOs of ETFs? So let's first talk about like the ETF Academy, and then we'll move on to the second question.
Yeah. So, yeah, ETF Academy is basically a media business. Also, like a lot of consulting in marketing. So I had this like epiphany that I know how to market ETFs. So a lot of our clients are ETF issuers that want to get into marketing or don't know where to start. And it's like, all right, like I have the brains of getting good ideas on how to market. So that's one of the avenues that we do. And then the next one is just when I would email these people like, hey, I want to interview you. It looked a lot better if you had like an entity behind you rather than just like you're just a YouTuber with like especially being young too. Like, I mean, and it just looks a lot more professional. So that's when I knew that it's a lot better just to be like really professional about it. And I would be taken a lot more seriously because a lot of people don't want to waste their time. And whether it's the editing and the way you're asking the questions, you're coming super prepared, you're coming in by the polo, like you don't look like you like woke up out of in the middle of the night. That's the main reason why I created that entity too. And I got into interviews when I was at a conference, and I don't know if I'm going to go to much conferences this year, but some ETF issuers would actually pay YouTubers to come to their conferences, not their conferences, but like alongside with them. And you have to go into it like a lot of people go into it like, all right, I'm gonna take the free flight and the free hotel and like F around. Like they put you in really nice places, man. Like you're in a really nice hotel, you're like in Las Vegas, you're in New York City, you're in Miami, you could be in the Bahamas, just a couple of events in the Bahamas, I think the Bahamas, Huntington Beach, like dude, you're having a good time. And most people would just like go around with their wives and or their kids and they're just like F around. And I'm over there like, no, like I'm gonna be in a suit and I'm gonna be like talking to people, whether or not I have no clue I'm talking about. But I think I could keep up in the conversations if it's ETF related and market related. If it's like in their world and their jargon, like I'm absolutely gonna get, my socks blown off and I have no clue I'm talking about. And I would go to these events and somebody was like, hey, like you should do interviews. And other people in the industry were like, yo, you should interview ETF like CEOs and talk about their ETFs. And it would be a lot beneficial for you and your audience and other people to like take a deep dive on what their funds are about. And I was like, dude, there's no way. Like I can't do it. I get already too nervous behind the camera. I can't imagine doing it with somebody else on the screen. And I ended up just doing one. I think the first video I ever done was with Sylvie Jablonski from Defiance. That got like 50,000 views. And I was like, wow, there's like a market for interviewing people. And then it was eventually like reaching out to other people or people reaching out to me, mostly the other way around. And I just wanted to make content where somebody could click on a video about an ETF ticker, whether it's, XYZ, and they could get so much out of the video and just like watch the video and stop watching it. They don't have to Google the next video to figure out this little question or this little question, but they could interview or they could watch the interview and be like, all right, I feel confident in my investment. I'm going to buy more. Great. I'm going to sell my investment because we've done some, I would say, videos where it's not like the best tone, and it's for a reason. It's kind of like, dude, you're media at that point. So you have to have a good stance of whether it's like good or bad, the ETF or the strategy or the person. So some of my videos, I actually want people to not come out of it to sell the product, but to be like, all right, like I really need to think about my investment. And I've seen like some of my videos have gotten like, you know, the next day, like an ETF would have like negative 50 million in outflows or like 60 million in outflows. And a lot of the ETF people will call me and be like, dude, like your video caused this, there, that, whether it's good or bad. So yeah, I just wanted to make content that no one really ever saw, which I never saw interviews, and make it as good as I can with like the best questions. Some of them are super straightforward. Some of them like I just pretty out of pocket, or some of them are just super insightful. And I just felt better making those videos than my own videos because I don't know the answer to that question, so I could just go to the source and have them answer the question. Ended up traveling quite a bit just to get my name out there. I would literally be working, and I would literally be sitting there like at my desk at my job at the Fed. No one's gonna watch this from the Fed, hopefully not. And I would be like, all right, like, and I would be like, all right, I'm gonna be sick the next couple of days, but I'm gonna be like, in reality, I'm like taking a flight to New York City with other people and like having dinner with people, or I'm gonna go to Chicago and have like dinner with this fund manager at a 5-star Michelin star restaurant. Like we're doing crazy stuff. And or even like I remember telling my girlfriend at the time, I was like, all right, I'm gonna do this and you're come with me because I need somebody to be here at like this event as like a +1 or something like that. So I would take all these risks with like work behind like actual work that I need to do like behind my head. So I was like risking like my job because I just wanted to make this whole thing happen with like getting more connections, networking, ability to make more money. And out of it, it was all worth it because I'm still here now. And I had 3 job offers at ETF companies, which were like triple my salary at the time. And I said no, which is crazy, but I just like what I'm doing now. But I believe in myself, and most of them like are super, I guess, amazed with how I like carried, how I like led on with it, because most of them thought I was not gonna say no, but it was all worth it. And so I don't think I'll ever do that ever again. It was a lot of stress, a lot of like crying, and a lot of like freaking out because you just don't know what the future looks like. But once you have a lot of good people behind you, which I did, I had a lot of good mentors, and I still do like all the time. Like if I have any questions about an ETF, I know exactly who to call at like the most powerful ETF companies that could help me get an answer or a connection or a contact to something. So I know that if something were to ever go wrong with my channel, with my business, with myself, I can make a phone call, and I have like offers here, whether it's like in like the startup world at like, you know, startups that are like 9 billion in market cap right now, all the way to ETF companies with, you know, 25 billion in AUM. So it's all worth it. I always tell people it's all worth it. Would I ever do it again? Probably not, because it was just way too much stress. Like there's no way. So
Yeah, man, that's an incredible journey, and as as you say right now, I mean, it's that fruits of the labor, like the things you're doing now, the 1% of getting better, or even just working super hard right now, you'll see it, you see the returns, and not just like 1 month, but the 8, 9 months, 10 months later. I was watching one of your videos, and I see that, you know, Neos is now sponsoring you, and which is awesome. I mean, they're a great company, and you've had their CEO on there so many times, and it's great to hear kind of them break down their own products. You're getting you're getting the news from the horse's mouth, as people say. You know, it's that point where you're like, these guys created these products, and they know kind of the vision, they know how their company is moving forward. And you have created your LLC, your media company, in order to kind of capture that and be able to sell it. Well, not sell it, but like be able to educate people on what you do. And even my comments, I mean, Ashley says you have inspiring interviews, and which is great. I mean, my 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 subscribers, they watch you, and which is awesome, because I think I may be pretty good at making videos, but you do a amazing job with these interviews, with the slight editing, with bringing in so many great things that you can just it just I'm just gonna say you're great.
Appreciate that. No, I appreciate that, man. Seriously.
But I mean, as we talk about this, what do you see as your vision, and how you plan to kind of not like the next days, but your vision for your company and your vision for this YouTube channel? Do you just plan to continue to make interviews? Do you plan to do other things that is part of this company?
Um, I would say for the channel, that's the easy question. So there'll still be interviews. I really want to get more involved with bigger people like Tom Lee, like Kathy Wood, like so that's like kind of in the works right now. But like regularly, like, I want to get like bigger people on my channel, and I think that'll be like more fun, because some of the ETF companies they could get like a little bit, it's not stale, but it's just more fun for me to meet new people. You know, the more people you meet, the more connections you have, and whatnot. So that's going to be more fun for me, is like, what other content can I make that is interview based? Because I love those. And I love doing interviews with like retail people, with YouTubers. That's probably like the bread and butter. That was an idea I had from my buddy Ari Gutman, and that's been, I believe, like I think that's more viewed than the interviews. And then the interviews with the ETF issuers have been really done really well. But interviews with like bigger names, I'm not saying that the people I have around are big, but with people that you hear their name, they're like, oh, I know who that is. So that's kind of like my vision for it. Keep on making my own content, my own original content with myself is obviously going to be in the books. But every single day, I'm not joking, every day, I think like, what is this like not enough, right? Like, if a lot of my like income is pretty much determined towards Q4, not November, December, but October. So October will be a big month for us. But I don't know. I always like there's big numbers you have in your mind and on paper, and you think it's like not real. But a lot of like every day I think of like, all right, when am I gonna chill out, because this is a lot of work, or is it just like my business, right? And a lot of I really have to think about like an exit. Like what's my ultimate exit? Is it like a subscriber count? Is it like a number and you could like chill out? Or is it just like totally new venture? I think you mentioned to me, like, are you going to start your own ETF? The first question is like, hell no, dude, no. Like I've been around a lot of these people who have net worths of like 50 million and they have an ETF. Like they could literally, they're not they're working, but their personal net worth is like 50 million. And then there's people who have not that net worth, but they started their own ETF company and they're just like absolutely stressed. And it's like, what is new that you have that the market doesn't already offer? And a lot of ETFs already like good ideas. So the new ETFs are seeing launched are just newer ideas, which new is never better. It's like, I just don't have an idea. And I don't think, even if I do have an idea, I would never launch it on myself. I would just probably tell somebody else the idea, and you could take equity in the ETF. There's a lot of ways you could take equity in an ETF, but no, I would never launch my own ETF product. Would I work for an ETF company? Depends. I am all about equity. Equity, equity, equity. Like, F a salary, get equity. Like, I don't care what, like, I'll even like ask these like ETF people, I'm like, yo, can I invest just in your firm? And they can't for compliance reasons, but I would rather put in $100,000 into X cover call issuer or Y issuer versus $100,000 in their product. You're gonna make way more money doing that than having your money in their fund, just in my opinion. But I was talking to my buddy the other day and I was like, I wouldn't want to get in the startup realm. That sounds like a lot of fun. It's gonna be probably more stressful than this. I'm not saying that my business is not a startup, but startups are like when you're making millions of dollars in revenue, like that's fun. So keeping your connections open, but I don't know. I just want to make content that I think is fun and I think people would want to watch, and content that I think the best content is the content that you think somebody else wants to watch. Whenever I always ask people like, oh, people copy my content, or like I'll get calls, oh, this guy copied your content. I'm like, dude, I don't care. Like they can make their content, but the best content is the one where you're like, all right, I don't think like no one has seen this type of content, and I think it's going to solve this problem. So that's where the interviews have done really well. That's where some of my videos done really well. So if you could do that, then you could do that. But there's always like a rut you might run into of, okay, there's so much. Definitely feels the need in the space. What the ETF?
Probably. No, your content, man. Your
appreciate it. Yeah, I'll say like
So yeah, I saw that in there, and I was like, man, Gary is. I mean, Gary watches a lot of. Well, he spends a lot of time watching ETF content, and he's right. I mean, dude, your interviews is filling a need in a space that I don't see any interviews. I mean, we talked about it ourselves. We seen like a Dividend Stockpile, Jeremy from Dividend Stockpile. He's got interviews, and you, and I don't see any other interviews. Like, and I go through and I scan and I look for different ideas on creating content, and I'm like, who else is doing interviews? I mean, you have other, like, I would say, creators doing podcasts. Like you got Ryan Williams and Ari as well. They have their own, it's called the Deep End, I think, the Deep End podcast. And they're doing a podcast where they're interviewing people with portfolios. And but you've got, I mean, it'd be awesome to like host like Kathy Wood or Tom Lee, or I mean, it'd be even cooler if you could get the old man Warren Buffett on there
one day, or even like economists. Like there's a lot of people who have price targets on like certain, like the S&P, I would love to pick their brain, or even on like the Dow Jones, the Nasdaq. I would love to pick their brain because that would tie into like VOO, Triple QM, STHD. That would just tie in perfectly on why they're having this bullish or bearish case, and just talk about it. Like that's the content I like to see. Like I would have never thought I would have made a teachable Q video, but I did, and with an ETF issuer, and that would just like I gotta make one phone call like, hey, I have this idea for this video and I want you to be in it. They're like, yeah, for sure. So just leveraging like your knowledge, like it's just so much fun.
Yeah. Wow. Yeah, man. I think I could just talk to you forever, and I think people would listen too. No, I mean seriously, like this is like I watch your videos, but I didn't hear like, I didn't expect all the kind of the knowledge that you've kind of embraced on the entire audience about all this stuff. And I'm like amazed. Like, I think I'm just going to watch this video later just to kind of pick out some tips and bits. And this is good stuff. So is there anything else like you have envisioned for this, your company? I mean, because the stuff that you've already talked about, it sounds amazing. You could just put it on your vision board. I've got one sitting in my bedroom, and it's it probably doesn't have Kathy Wood on there, but it's definitely got Marcos Milla, maybe Professor G next.
See, my vision board changes every day. It's so weird. Like I have, it's like the weird, like my mind every day is like always going about like, like I want to make this type of content, or like this type of content, or like this video I did, I could have done a lot better. But I don't know. Like I said, like the best type of channels are the ones that just keep on making good content that, like I said, you think people are going to consume, but get some good value out of it, which is why I love the interviews, which is why people obviously want to hear what I have to say, like an 8 to 10 minute video. Those have a lot of value too, if you could just be super specific about what you're trying to say. But at a certain point, I do think over time, if you post like too often, like you could get really redundant on your content. Like for example, there's only so much VO content you can make. There's only so much like SCHD content you can make. But after like talking about SHD for maybe the reconstitution, it performing well, like what else are you talking about? Oh, pairing it with other ETFs, like what else are you talking about? So it's really thinking, okay, like what kind of content do I have in my head is I think going to provide value to somebody and that they would consume, because of course you want to make your time worth it too, right? You don't want to make all this do all this work for not a lot of views. But yeah, that's where also like the network comes into play, because you meet other people. And if any other creator wants to like either jump in certain like in income or even like a random person, it's just like be the best at what you could do and meet new people. Whether it's like getting burned, like I've gotten effed so many times. Whether it's by other creators or whether it's like other people in the industry, I've got effed so many times. But I've won with other people more than I got like effed. So it's like worth it, right? You know, and the best type of people are the type of people that you could meet and you could tell them, you could call them on a personal level, but also like they're great business people. So yeah, every day I feel like I'm involved with some sort of ETF issuer sort of person. Like I'm always in talks with them, and you have to stay on top of the market. But yeah, man, it just even just like my friends, like they'll never get into the creator space or the ETF space, but they always want to ask me like, oh, it must be nice. Like we'll go out to eat, right? And they'll be like, all right, like they always think that I want to go to like the nicest restaurant, because they're like, they know how much money I bring in. So they're always like, oh, like, are we going to go to like Nobu today or like Mastros? I'm like, dude, no, like I like basic stuff. That stuff is nice, but they always try to pick my brain because I've gotten my buddy's job somewhere. I've literally got them connected to like, if they were, like one of my buddies, he wanted to make like X amount of money a month. Like, all right, I could connect you with somebody who could pay you X amount of money a month for a side hustle. So it's just having a good network and going out of your comfort zone. And if you have an idea, don't not tell somebody about it, but most of my ideas, just try to go for it. And if you tell people about it, make sure they hopefully could help you with your idea, but they'll help you. So whether it's like, you have this idea for business, this content idea, you want to switch industries at this job, you want to do X, Y, and Z. That's obviously help for me. And then just being realistic about your like financial state, which is why I hate SoCal, because everybody, like every guy in their like early 20s, I'll meet somebody or I'll go on like on a date with somebody. They're like, oh yeah, like this guy took me to this spot, or like he said he did this for work and he drove this car. I was like, okay, that like what? Like this guy's either not what they say that they are. A lot of people are in debt, like driving these cars or wearing these clothes. It's like it's like all facade. Like I almost don't like going around in like society, because everything is. I've been around, in Wall Street and like different types of rooms, different types of tables, and it's like the real people are like the people that kind of I know in my circle, and everybody else just like it's all facade, it's all fake. So
Yeah, that's understandable. And I mean, I think yeah, my wife and I we have two kids, and so we recently bought a new vehicle, and I think my wife's cousin's like, "Oh man, that's fancy," and I was like, "It's like 15 years old. It's a Lexus RX 350, and the
there you go.
reason, but it's 15 years old. It's from 2011. The reason we got it was it had a great price. It's one of the best SUVs out there, and so I like it for safety. And my wife's like, "This is a real family car." I was like, "Yeah." So I mean, we went from like a Mazda 6 to a old Lexus SUV. I'm like, we're not really that fancy. We're just trying to make sure that our cars last a very long time. And we bought it in cash because I mean, I don't really want to put a car payment or have like debts or anything. And my wife's very anti-debt. She's just like, if we buy a house, we're gonna pay it off very fast. I was like, or we could invest the money.
Exactly.
Yeah. But I mean, I
I love
understand. I mean,
cars.
like I'm a simple person too. Like and my wife is I'm great. Like hopefully she watches this, but she probably won't. But like the reason we kind of we met in I asked her, I was like, oh, let's go to like this brewery and like get a couple beers and that's me. And she's like, how about we grab some beers from 7-Eleven and we meet at this one place, which is a park. And I was like, oh, that sounds great to me. I mean, because I'm frugal, and I was like, yes, this is the woman I'm gonna marry, and I did,
Yeah,
and so
that's amazing. There we go.
I mean, we may go out to like a nicer restaurant like once in a while, like for our anniversary, but man, we are like chill. Like if we want to make have people come over, we don't buy fancy food. I cook it up myself, and sometimes she will cook, sometimes, but
Yeah, that's funny. Yeah, like, or even being frugal, I always get like the same type of comments. It's like, dude, you invest so much money a month, like you should live your life. And I'm like, bro, like, what do you mean? Like, what do I do? What am I supposed to do? Like, what is that supposed to mean? Because I've traveled. I've been to for the first time ever. I went to Costa Rica last December, which was what, a couple months ago. Went to Cancun 2 weeks ago, and or a week ago, and I don't know. Like, traveling's not really like my thing because I want to work. Because always feel like people are like, "Oh, you could go to this country and this country and be a digital nomad." I'm like, that's not how like I operate, or like I would probably get. Oh, that's not how it works. Like I need to be like at a desk, like specifically somewhere where I know and be working and going to working out and going to the gym. Like I don't like going on random gyms because I just get thrown off by that stuff. But definitely like being frugal is a choice for a lot of people because that makes them really happy. But of course, you could always let loose depending on what you're really interested in.
yeah, exactly. And I mean, I'm frugal, but I also like to travel. That's like my thing. But I also take my computer wherever I go. And my wife's like, "Are you working?" I was like, "Yes." I mean, because it's like I have I don't even know where my other camera is, but I've got like a DJI Pocket 3. So like last May, we were going to India for a wedding, which never happened, and the couple's getting divorced, but that's besides the point.
Oh
And
no.
so like I had points. I was like, look, I don't really want to spend money in flights. Let's just use my points. Let's fly business class. And my wife's like, is that a waste? Because our daughter's like 2. And I was like, we shall see. I mean, whatever. And like I had my own seat, and my wife, I guess she wasn't a little happy because my daughter kept on hopping over into her seat. But I was like, man, I've got my camera, like filming everything, trying to make some good content, which I haven't posted yet because it's still sitting on my SD card. And I was like, well, but then I was working on my computer. But I mean, we all have like I think different things we like to do. Like I love putting money into investments, and I also love traveling. And so that's like the two things like that I put my money into. Well, I haven't traveled in a while. I've got a 3-month-old, so it's not happening right now. But so all my money is going into investing. All my money is going into like YouTube equipment and into my business to grow it for the future. But this is a little bit of a segue, and maybe you could answer this. One of the commenters was trying to kind of figure out what would be like a good, I don't know, investment allocation. So most people, you're in your mid 20s, which is great, and you have already talked about you've got the S&P 500 and a lot of growth. Let's talk about maybe what would be some good investment allocations for maybe someone in their 30s, maybe someone in their 40s, and then getting closer to, I would say, retirement. I've had people ask one person, they're not in this chat, but they've asked I think 2 weeks in a row. They're like 49. They're looking for how to create a portfolio. So what are some of your opinions? Now, people have talked about small caps. People have talked about large caps and maybe the S&P 500 and growth. And I know your interview with John Tinsman, he is very anti small caps and mid caps, but I want to see, like, how would you construct a great portfolio? Um, is that a lot of questions and a lot of information?
No,
I'm
I
sorry.
got it.
Okay.
I would say I would say if you're in your 30s, so we're talking about 20s, I think anybody in their 20s should just go pure growth. Like, don't care whether it's
I'm gonna
index
like
funds,
that.
like whether it's like index funds like VUO, SPY-M, or even the Qs, SDHG, any type of technology based growth fund. I like that a lot. Even in their 30s too. But of course, some people in their 30s are going to be like less risky. I think if you're in the 30s, you're still really young. You're like a kid, not a kid, but you're like a baby. You have a lot of like, you have 25 plus years, or 25, technically 35 years of working, hypothetically, if you're 65 from 30. So you have a lot of life to live. So I do think in their 30s, you should go pure growth, but maybe not all like tech and software and semiconductors, like an SMH or something like that. Maybe still having a VUO, SPY-M, VTI, whichever one's your flavor, and then the Qs and in the growth. And then maybe if you're in your 40s, that's where I would say some people are going to be thinking, okay, we have this weird mindset shift in like society where people want to retire in their 50s. So they really think that their 40s is like where they should start de-risking, which is kind of interesting. But I would say in your 40s for example, I'm going to go pure growth like the whole way through. Like, I do not care. I'm going pure growth the whole way through. But if you're in your 40s, I could see where you could like de-risk a little bit. And I like large caps more than mids and smalls because it's going to be less volatile, or even mega caps. Like, the large caps nowadays are not even large caps. They're like mega caps. They're going to have less volatility than smalls and mids and be more profitable and have better revenues and growth trajectories and upside. Well, not upside, because it depends on small caps. But I think large is better than the mids and smalls. So maybe like having some lower vol, lower beta names, whether it's SDHD or a VYM. I feel like those are going to be like two good ones. DGRO maybe as well, throwing that in there too. International, it's going to be like a super hot take, but if you have something like a VT, VA, or VXUS, I think that's going to be just fine. Maybe a little bit of gold. Oh man, like there's so many ways you can like de-risk the portfolio. Because you're not really de-risking it from like equity or a risk standpoint. You're kind of like diversifying your basket. So the only ways you could really diversify it is adding in an international, or maybe like some gold as like an inflation hedge and kind of like that sort of value that's kind of quote unquote uncorrelated to the market. Maybe even broadening the market with the dividend funds. And then in your 50s, I could say like, why not just like roll the whole way through? So if you have like more dividend stuff, like SCHD, or just broadening into like consumer staples, energy, and industrials, I don't see why people can't have like VUO as your core, or even a VT as your core. I feel like VUO or VTI or VT should be your core, no matter what stage of life you're in. Just my personal opinion. Maybe even the Qs if you're super risky, and then having like whatever adds diversification. So whether it's international, like VA, VXUS, whether it's a little bit of gold with GLDM or GLD, or maybe even a cover call fund. And maybe even like those cover call funds actually do add a little bit less vol in your portfolio. That's where I could see maybe in your 50s, late 40s, early 60s, like some cover call funds could add a beneficial factor for you, because some of them are like hedged. So they won't go up as much, but they won't go down as much than the market, even though they kind of do our cap or upside. But I could see there's like a lot of ways you can answer this question. And to me, it's like whatever fits your goals and needs, and you could comfortably buy and hold for 5-10 years and buy when the market goes down. For example, like right now, what SCHG is down like 8% on the year or something like that. And people are commenting, oh my God, SCHG sucks and SCHG is great. I'm like, okay, it's just like a time period. But if you really think that, then you shouldn't even be invested in growth. So it's just whatever fits your goals and needs, and you could comfortably buy it and sleep well at night. Great. Some people, it's like, This is why I hate going to conferences, because like last year when I was at conferences, all these financial advisors were saying, okay, buy international in gold. And that worked last year. It worked amazing. And they were saying, don't buy SCHD. Like literally there was a chart that all these financial advisors were saying, all right, like these dividend funds are not it. We're telling our clients to add diversification with international or emerging markets or developed markets, basically VXUS or VEA, and then adding some gold. And that did great. Like gold, did amazing last year, still doing great. International did
Yeah,
amazing.
it was up what? I mean, it was up high.
Yeah.
Like it was like I think they were saying like it was like Bitcoin, gold, and Nvidia were like some of the top performing assets in like the last 5 years, which is
Yeah. And now
yeah.
people are saying energy, consumer staples, and SCHD, and they're not specifically saying SCHD, but they're basically saying, okay, industrials, consumer staples, dividend stocks, the Dow Jones and industrial average, which is basically like SCHD similarities. And they're saying to do that now. And
Yeah,
also,
yeah.
so it's kind of like every year there's always a shift on like what's going to be the next big thing. So it's like either you time it or you just buy and hold what you think is going to do well in the next 5 years. So it's going to be it's super crazy. Even Bitcoin too. I think there was a chart in like the last 5 or 10 years that said if you had, I think 3 to 5% Bitcoin allocation with the S&P, you actually amplify your returns, of course, but you actually had a less volatility, which is weird to say because Bitcoin's volatile. So all these different ways you could add less vol and lower beta. But in my opinion, if you want to have the most amount of wealth in the next 5, 10, 15, 20 years, your beta should be at least a 1 or above that. So a 1's the S&P, less than 1 is the SCHD, less than 1 is covered call ETFs. What's more than 1? It's like growth, large cap tech, semiconductors, and pretty much
And
it. Maybe
then you just got a whole bunch of high beta companies that are, I mean, just doing crazy. But I
yeah,
mean, with those, you also got high volatility as well. And
true.
I mean, you can see that right now. Well, I would say in 2026, like you see a lot of high beta companies. I mean, they're just it's like a roller coaster ride right now. I mean,
Yeah,
I follow some
all of it.
companies on like a watch list, and I'm like, oh, this company's up 6% today. This company's down 7% yesterday. It's like,
Yeah, it's all about picking the winners too. It's like what Robinhood was down like what 50%, 60% from all time highs. So you're like, all right, is this a bad company or is this just like market sentiment rotating out of market money rotating out of software towards consumer staples and energy and
well, and if
industrials?
you look at it from, I think last year, like Robinhood was sitting at like $16 last year at this time, and then it went up to like 160 at some point. But
Hmm.
yeah, it's now sitting at like 75. So if you bought when you were when it was like 16, you're still up. But if you bought when you're 660, you're like, oh, I just lost 50, 60% on my investment.
Yeah. So it really just all depends on like what makes you happy. But that's what makes our job harder is because there's so much stuff coming out and you have to really pick like if you already made a video on it, it's probably the top. Like, you know what I mean? Like if we made a video on SDHD, which everybody has, it's
Yep.
probably the top.
Well,
And
I've got a
so
video coming out on Friday, and it's it's a video about like the top performing dividend ETFs right now, and I did list kind of the reasons why they're probably doing well. And who knows? I mean, tomorrow, as in Thursday, the market could go crazy with tech, and then these dividend ETFs could crash down. Now I'm like, oh, should I still post it? Well, I've already made it. Yeah, I'm gonna post it.
yeah.
But it's like you said. I mean, it's already the top. I mean, at one point, I think it was like 2 days ago, I saw SEHD was a little bit over 15%. Well, today it's already down because tech was doing really well, and who knows what's going to happen tomorrow. There's rumors that a rate raise could happen instead of rate cut, but then all of a sudden, the market literally today looked like an upside down U. It was up, then came down, and then kind of jagged like in the after hours. So it's fun. That's why I've got more white hairs in my beard. Wow.
Yeah.
Not really the market. I
You
always
can't
tell
see
my
mine.
wife
I can't grow facial hair.
just wait a few years, maybe. I mean,
Maybe.
my brother didn't grow his beard until COVID, and that's 5 years ago. He is 30. Now I gotta figure out how old he is. He's 37, so probably 32. He started growing his beard, which looks way better than mine. Man, jealous.
But kind of like back to that question, it all depends on your own goals and needs. So, like for example, like I really wish a lot of the SCHG people allocated more towards like SCHG, VOO, QQM, because they could hopefully, well, if we look at the past, the past performance never indicative of the future results, but in the future, hopefully, if the tech still plays out, the AI still plays out, software still plays out, that should technically outperform SCHD. So you'll have more money than if you just bought only SCHD. Same thing with the cover call funds. Like they're great, but if you had just a little bit of money towards maybe a VOO, QQM, SMH, or something like that, or maybe even the crazy cover call funds, if you stay away from those, then hopefully you end up with more money. So, but am I going to get mad at somebody if they go 100% SCHD or 100% JEPQ and they could have gotten more returns by buying 100% VOO? Because the next alternative is what, like cash or non-investing. So if they're getting like 7%, 8%, great, 9%, 10%, or 7, 8%. But if they could have gotten like 10 with the market and they lost that 3% margin, then boohoo. But at least they didn't get negative with cash. So it's almost as if I'm happy if they're happy. And if there's less people watching, I think that's a good thing. That's obviously not good for creators, right? You want more viewers. But if you have less people watching, then that's good, because there's people living out their lives and they're invested, and we did our job, which was to educate people, and they could come back when SCHD is back to being flat or negative, hopefully not. Or if the market crashes, we have to make content on like what to buy, which is going to be the same exact answers. And be like, every year, everybody does the same ETF videos, so what to invest in, the same exact thing. It's VOL.
Yeah, it's like all right, these are the top 5 ETFs for 2026 or 2027. It's going to be like when you'll be making content in December, you're like, all right, QQQ, VTI, VGT, SCHG, SCHD, maybe DGRO, maybe. Yeah, exactly. I understand. I mean, I create content, and what I do is, the hard part is creating new and inventive content based upon old news. Well, new news that could be old news within a day or two. And I think that's the hardest part. And I'm always learning from my audience. My audience is probably, I mean, they're on news products so fast. I'm like, wow, where are these products coming from? Then I look at it, I'm like, oh, this one product's like, it's like 3 months old. Like I was getting in conversation with someone about a new momentum ETF, because one of the best momentum ETFs out there is SPMO. Well, I did a whole video on momentum ETFs because I remember I once got into MTUM. Yeah, that's it. And then I did a video on momentum ETFs, and I was like, man, SPMO is great. Right now, it's down 3 or 4% year to date. And so everybody's jumping on a new one called FMTM, which is only like, I would say like 4 or 5, 6 months old. But it's like the new kid on the block. And one day, I mean, that new kid on the block may not last. And so we'll be back to talking about the praises of SPMO when it does its turnover in March. They switch in, take out. And so we'll be talking about it possibly back in March. Like, oh, let's look at what SPMO is doing now, or the reconstitution of SEHD. And is energy going to be such a high percentage of its sectors in SEHD in March? I don't know. I mean, we don't. Some people probably have good guesses, but is energy going to last this whole year? I mean, energy last year was XLE. I looked at XLE. XLE was 7.88% last year alone, and SEHD was 4.33%. So SEHD barely moved. Energy barely moved. Right now, energy's up 20%. SEHD is up 15%. So there's that huge correlation right there.
But remember, everybody was making content on SPMO last year, and that was the top. That's got to be the top. That was for sure the top. Yeah, I mean, I made content too. But what everybody thought, SPMO's top was like what, October?
Flat. Yeah.
Flat down. It's not really doing anything. It's down on the year, but you know,
well, and I think in September they changed their portfolio. They got rid of Costco. Well, Costco has been flat for all of last year anyway, so I thought that was a good move. But it was like a 72% turnover ratio. They threw in Oracle, which had some great news in August, and so I knew that. And then all of a sudden, Oracle past September, just they've been flat and down, and it's like, oh, I mean, that's what happens. And then you've got, I mean, more stable ETFs, I would say, like SEHG and the Qs. They don't turn over their portfolios as often.
No.
And so even John Tinsman talked about this in the interview with you. He said I would rather buy and hold like the companies for AOTG for the long term because I believe in them, instead of turning them over every 6 months, every quarter, every month, like some of these other momentum ETFs. I know I'm going to probably drive some people crazy with kind of talk about momentum ETFs in a negative view, but that's kind of a negative view based upon them. Is they may be doing well now, but if they turn it over and they lose some of their winners and kind of bring in some losers that are winning now, but maybe losing in the near future, it's kind of a negative to it. That's how John Tinsman kind of put it, if that makes sense.
Yeah. Or even some people think, okay, this stock ran up 5, 6, 7x. Is it going to keep on doing that, or is it going to be flat for the next 3 to 5, 10 years? I think Pierre Lynch there's an interview with Pierre Lynch on The Compound, which is a podcast on YouTube. And Pierre Lynch was like, okay, those companies, he like still, made a 10 bagger, 10x on those buys, even though they were ran up like 6, 7x, because you believe in those companies and you just let them run. So it's almost as if you don't want to cut the winners because the winners could keep on winning. And in that case, I think it was Microsoft back in the day, Apple, I believe I don't think Costco was back in the day, but those are just two examples, right? Apple, Microsoft, and you let the winners run, and they're going to have, I think every ETF has or stock has a pullback, whether it's like 30 or 40, 50%, they'd have the confidence to buy it again, which is the same thing that happened with SEHD from, I think it was like 2022, 2023 highs, being flat, negative for a year or two, and then just going back up again. So I think it could be said for maybe even semiconductors if they ever slow down, or international, right? Being flat or like underperforming to now it's like the last couple of years is like international has been a silent winner because no one's really talking about it. But like I said, this is where I think it's just buying what you think is going to do well and continuing to do it and ignoring the noise, but having big money to do it. This is why I like concentration and like a few names and getting the money to do it. I hate it when people are like, all right, I'm going to be buying $100 of this ETF for this video. I'm like, bro, what's $100 going to do? What's $1,000 going to do? Like,
or the ones that you say, I'm going to buy like $5 of SEHD for a whole year. Every single day here. Like, all right. I'm like, yes, that's dollar cost averaging. That's good. But I mean, $5 times what, like, I don't know, is it 200 plus like trading days? It's like, that's like $1,000. You could be doing like $1,000 a month and seeing what happens at the end of 5 years, where you're like, oh man, this is like the dollar cost averaging of that. Or like, I remember, like you talked about 2022, I was buying QQQM in 2022 when it was down, because I was like, man, I love growth. I mean, I'm a huge growth person, just kind of like you. And like and I was buying it. I was also buying like TSMC when it was like 80, $90 a share. It's right now like 350. Because I used to live in Taiwan for a good bit. But like in 2022, the Nasdaq 100 was down like 33%. So I was like, oh, this is a good opportunity to buy something that I like and that I think could do great in the future. 2023 rolls around, the Nasdaq 100 is up 52%. I was like, see, that's when you and Warren Buffett makes the same statement. He's like a lot of people they like to buy stocks when they're going crazy. And he's like, I like to buy them when they're dipping. And he compares it to a hamburger. He says, why do you, when a hamburger costs $5, most people are going to buy it when it's at 450. But in the stock market, a lot of people buy it when it's $6. And it's like, and to me, I understand that. Like, oh, a cheap hamburger, man, I am all in. Like, I go to the store and I see it, like I once saw, it's like the hamburgers are marked 35% off because they need to sell in the next day or two. And I come home and my wife's like, Steve, why do you have hamburgers? I was like, it's on sale and I like hamburgers. And she's like, this, yes. And I also had some sweet potato fries to sweeten the deal. But it's the same concept. It's
Yeah.
You buy things. Like I've got a video that I recorded yesterday. It's probably gonna come out sometime next week. About different tech stocks. So I had like 5 different tech stocks that are doing really well. And one of the ones that I think I would buy in 2026, and I won't give the hint, but it's down. And that's it. The reason I like it is because, well, first of all, I really like the ETF. It's got some great companies. It's got a good low expense ratio, and I hold a huge portion in my portfolio. And it's down, and that's another reason why I want to buy more of it because the price is cheaper. And so when it goes back up, more people are going to buy it because it's that momentum. It's like, oh, FOMO, I'm missing out, so I want to kind of pile in. And me, I'm like, oh, I see the dip. I want to pile in now when it's cheaper.
Yeah. And that's always the mentality I think that people should have, but they don't. It's always like performance chasing or chasing the next big thing. And then they get mad about the performance. It's crazy how nowadays people give an ETF like 2 to 3 months. Well, maybe this is the cover call space, but also maybe growth too. They're like, all right, I'm gonna give this ETF 2 to 3 months to go up and perform well. If it doesn't do that, it's probably a bad fund. And I'm like, bro, what do you mean? It's like S&P 500 based. So like, you can't get mad about the market. Or it's Bitcoin based. And they're like, oh my God, this ETF is down 30%. This fund sucks. I'm like, bro, it's tied to Bitcoin. Bitcoin's down like 50%, something like that. So this is always so many things that gets me like mad, but it all ties down to what you could confidently buy and not flinch. And if you could do that, then that's probably your strategy.
Yeah, yeah, and I think one great strategy with that is don't look at the market. Don't look at your portfolio. Just look at it like once a year, and it makes it simple for most people. I mean, it would make it simpler for most people. You're like, all right, oh, I bought SEHD in January, and then in December, like, oh, it's up 10%, or VOO is up, 15%. I did a pretty good job. I guess I will. Um, do something different or do the same thing and just keep on doing it because I think 95% of people should do that. Buy a simple index fund ETF like a VOO, a VTI, make it a core, throw in growth if you're young, throw in maybe some dividends or some stability if you're a little bit older and you don't want to see the market fluctuations, and then just buy and hold. Don't look at it and just keep buying it. Automate it. Make it easy. You don't even have to think about it.
Yeah. Automating it is probably the best way to invest. Well, for a lot of people. But if you can't automate it, then you have to be confident to buy often and keep on buying it. And always
Yeah.
reinvest distributions, dividends. I'm not a huge fan of people when they take dividends and they buy a cover call fund or they buy a high dividend fund. They're like, all right, I'm gonna take that dividend and buy this. Because you're really like losing on performance from your own ETF that paid you the dividend or distribution. But
Yeah, it's like
Eventually, it
SCHD
goes simple.
had like a 3.7% dividend in 2025, but it only went up 4.33%. So if you take out that 3.76, I mean the price appreciation just wouldn't match. But if you reinvested it, then you're allowing compounding to happen. And so that's the same concept.
Exactly.
All right. Hey, so man, we've been talking for an hour and a half, and I think I told you I've got a rapid fire closing
Oh, sweet.
answers some questions, and so we're gonna end. I've got 8 questions, um, and if I don't like the questions, I probably won't use them. So we'll see how many of the 8 will hit, and then we'll close it out, and then you can let us know like where to find you at the end, and then we'll close it out. And if anyone has any questions, leave it in the chat. We'll see if we'll get to them. But let's hit that rapid fire. Okay, you ready?
Let's do it.
I haven't even thrown these out at you, so these are going to be some. I hope you have some good answers, and you can think on the top of your head. Okay, the first one is, what's the most overrated ETF right now?
Overrated. Oh man, I would say overrated. WPay by Round Hill.
Oh, I've seen that. People have talked about it.
Yeah, WPay. I thought it was overrated when it first came out, and still think the same.
All right, let's get on to the next one. What's the most underrated ETF that people are sleeping on?
I would say DGRO for sure. Like that one is rarely in anybody's radar because it provides dividend growth year over year. Just like it'll probably be a better dividend growth in terms of like stability than as SCHD because it screens for those dividend growing stocks, right? It has technology in it too, which obviously SCHD doesn't have that much technology if anything to really move your needle. So it's a diversified from the sense of it has a lot of sectors in the market, high quality names. It has dividend names, defensive stocks, but also stocks that could grow like a tech stock and whatnot. So it's kind of like a VOO, but with a little bit of SCHD like characteristics, and it has a higher yield. So that's one where I think people really sleep on. And that's a fun one to hold because you obviously get participation to the upside when the market goes up. Like when the market goes up, you're really praying SCHG goes up too, because that's not always the case. But with DGRO, you could sleep at night knowing, okay, sweet, it's gonna hopefully or it's gonna correlate with the market, but I also get a higher dividend and I get dividend growth, like the best of everything. So that's probably a sleeper fund, I'd say.
Yeah, actually, DGRO made it in my I think top 5 of my dividend rankings. So in SCHD did not.
Yeah,
You guys can roast me in the comments about that one.
there you go.
Or watch the video and then roast me in comments there. All right. I don't even know why this. Let me skip that
Just ask it.
question.
Ask it.
If you weren't making financial content, what would you be doing instead?
Oh, easily. I would probably be either working at an ETF company and or working at a startup. Probably not like a pre-seed startup. Like they're probably like a series B startup, series A startup, like already pretty healthy in their life cycle of a startup. So probably those two.
Oh, awesome. That's awesome. Let's see. Ashley's got a question, but let's hit Ashley's question real quick. She's got do you have a favorite news ETF?
I would say for now it's QQQI and SPY is the second place just because I like the yield and I like the Nasdaq 100 a lot more for cover calls than the S&P because at least you're outperforming the S&P if the market goes up in its favor for tech. And I would say the boosted ones, I really do like at least the concept of it. I don't know how the market will perform because we don't know about like how the fees would look like and how they could drag like volatility, there's volatility decay in leverage funds, and there could be fees embedded into the fund that could drag down your returns. But if in like 10 years I would own a cover call fund, it would probably be either QQI or SPY or the boosted ones, but we'll have to see. So
Oh, nice, nice. What is the best financial advice you've ever received?
I would say the best financial advice is either just to buy. Like I used to have this like weird things where I would have like 10,000. I think one time in New York, I was like about to go to a speaking in front of people for at an ETF conference, and I had like $20,000 sitting in cash, and I was like, I know exactly who to call. It's a fund manager, right? Calling them like, "Yo, this is my situation. I don't know about the market. Like, what are your thoughts on the market?" And they would always be like, "Marcos, just buy them. Just buy it. Just throw your money in it." Like, and I think I've made more money doing that, at least in the portfolio, than just sitting on the sidelines and timing the market. Because we could go back to last year and maybe not the January, but if you look at the chart, like all the money was made like early on in the year. And if you after April and like May, June, July, if you were like, oh, the market's going up and up and up, it's not going to keep on going up. It just went up more. So if you were that person that was like way on the sidelines for another dip, like you just missed out on like 5, 6, 7, 8, 9, 10, 15, 20%, depending on what ETF we're talking about. And so you lost
Or
a lot
or
of
even
confidence.
stock. I mean, like
Yeah,
like
for stock.
Google.
You lost a lot of money. So it's like, don't wait, have some skin in the game, or just go like full on in. Because worst comes to worst, if you have a job, which most people do. I'm not saying I don't have a job, but like most of my income is determined by me. But you'll get another paycheck in the next couple weeks or in the next month, depending on your cycle, or weekly. So it's like, all right, you burn this money, you kind of just crossing your fingers, and people always feel like, oh, the market's, if I have no money, the market's going to go up in 2 weeks. No, that's not how it works. Like, well, depends. But like Bitcoin, like people thought, okay, like 2 weeks ago was at 70,000, and they're like, it can't go lower. And now, if you're that person that just waited, you're at a better price. But like markets don't just reverse all of a sudden; they reverse for reasons. So I'd say the best, final decision is always like go and buy. And maybe the second one I'm thinking too is like bet on yourself,
Mm.
because that's obviously gotten me pretty far in life, because there's no one else that thinks like you, or looks like you, or has the same motivation as you and passion as you. So it's like I have this ego where I'm like, all right, I think I could do it better than XYZ person, which is why like I think that's my success, is like I think I could do better content. I think I could do better this than somebody, athletically, somebody, or grades wise. So just like believe in yourself, because I think that's the biggest. If people don't believe in yourself, then you're just gonna have an employer give you a 3% raise every year versus doing it yourself. So
Yeah, yeah, man, that's great. I mean, now um, let's see. Got these questions. Yeah, yeah, that's great, man. Yeah. I've got one more question. Well, I actually got two more, but
no problem.
what's the one thing you wish you knew about investing when you were 18?
It's so simple. It's so simple, because everybody's like, all right, there's day trading, there's crypto, there's buying, selling stocks. Like I'm friends with people who make like 80K a month on like courses and e-guides and discords. Like I know everybody in this industry, from like ETF providers that are good, ETF providers that are bad, good people in the industry, bad people in the industry, people that make money on courses and mentorships and 101s, and even on interviews. Like these, one of my buddies makes like $1 million a year interviewing people in the ETF industry and stock kind of like commodity industry. So know all these people, and you think it's like everybody has like complicated way of making money, or even just investing, that like it just, the whole media is supposed to take away your time, make it complicated, so you freak out and you don't make a lot of money. But reality, it's like you, or even like the question of, I just wish I knew that it was that simple. Whether it's just buying an S&P 500 fund, whether it's a cover call fund that you love, a dividend fund that you love, making that your core and sticking to like a 2 to 3 investments or 4 investments, and you're just like plotting away money onto it. And it's that simple. You just like buy and hold what you believe in, and you make a lot of money there. But I just get upset at the media and a lot of, that this the next hottest stock or the market's gonna sell off, or they just catastrophic event, and it makes everything complicated. From like finance is super complicated. They have all these big terms, but this is why I love the interviews too, because I could I hopefully like to look dumb in some of my interviews, because I want to ask like a super basic question and get a super high level answer answered in a basic way, so somebody can understand it. But yeah, investing, I wish I would have knew that it was that simple, and I'm glad it was, because I read one book on investing, and that's all I needed to read. It was Tony Robbins' Master Money the Game, and
Yes, I know that one.
might be outdated now because there was a lot of like uh, oil and gas stuff from in there. But I would say just like it just taught you the mindset of investing, which is like buy and hold S&P. He all talked about in that book with the S&P 500. That's why I'm pretty much always gonna be addicted to it. But it's that simple. Like everything, once you complicate things and people start talking fancy at a table, that's when you know like they're not the real deal. But when someone could dumb you down to you a lot of things like an elevator pitch, that's when you know it's real.
Yeah. My favorite, well, I would say my favorite investing book is The Simple Path to Wealth by J.L. Collins. Have you read that or have heard of
No,
it? Oh
no.
well,
Oh,
he
I've heard of it. I've heard
basically,
of it.
yeah. It's very, like, it's a very simple and a fast read, and he goes through. He basically wanted to help his daughter like invest, and so he wrote her letters. She didn't read them. He made a website. She was reading a little bit. So then he just took all that information, just put it into a book. I mean, it's literally almost like word for word from his website. He basically said, just invest in like VTSAX or VTI and just chill. And he said like he had lost his job, but he was sitting on the couch just chilling with his daughter. And so I was like, what are you gonna do about work? He's like, well, I've got FU money, so I'm good for a couple years. And now he's like, well, now he's got his book in like 50 languages. So it's,
Mm.
but I mean, that's great. I mean, that's some great advice. And I've got one more question. Hopefully you can answer this one. Is where can people find you? Like on social media, YouTube, where's the best places to find Marcos Milla? Is it YouTube? You've got an X account because I follow you.
Yeah. Oh, do I follow you back? Please tell me I follow you back.
I don't know yet, so I have to check.
I was about to say on X, I'm not really too active on X. I used it because a lot of the ETF managers are on there and they could say a lot more free stuff there. So I'll hop on there just to see what they're saying. But it's pretty toxic, so I'm not really a big X fan. YouTube,
I
just Marcus
understand.
Milla. It's my name. So YouTube is like my main gig where people can find me. And then some people find my Instagram and I'm like, oh, like I don't answer like much DMs. All I do on Instagram is I just send memes to my buddies. So
I actually had a hard time finding you on Instagram. Like I was like, I know it's Marcos Milla, and I'm like, where is this? Like
yeah.
trying to like make sure I have all the right information. I was like, man, I could find your university and a picture of you on their Instagram, but I was like, oh,
Yeah. But yeah, YouTube, Marcos Milla is where you can find me.
oh, perfect, man. Hey, man, it's wow, we're almost at 2 hours. My wife is texting me probably about some other things, but man, I'm glad you joined this. I'm glad you answered. You left us with tons of information, tons of quality content, and tons of things that people can rewatch and just learn about you, learn about just ETFs and even allocations. And I'm glad you joined us. I'm glad you're so free that you've made this time to be able to be on it, because I know you have a busy schedule. I mean, just with running your business sounds super busy. I mean, I'm busy too, so I understand. But thank you for being on here, and I'm glad. And even one of my favorite subscribers, Gary, has said thank you. And we're already at 24 view. Like this is one of my highest live streams. Like the amount of people that are actually watching, which is awesome. Make sure you guys like and subscribe and share this with your friends and family. But thank you, Marcos. Do you have any last words before we kind of end this live stream?
No, this has been amazing, man. I really appreciate it. And hopefully this isn't the last time. I'm really wishing a lot of success for you and your channel and your family, man. I know YouTube could be hard. Investing could be tough in life too, but I'm really praying and hoping hoping for the best. So
well, thanks, man. Thanks. And yeah, thank you for I hope to get you back on here. I'm sure we can arrange a time, and maybe one day you're interviewing me, which would be awesome too.
That'll be in your cards, man. We'll be in touch.
All right, cool, man. And hey, thank you everybody for joining us. I'm going to end the stream, and remember, like and subscribe, and we'll see you guys next week. And we'll see if I have a guest or if it's just me, or maybe I find someone else to join us. All right, you guys take care. Have a great day and continue to buy and hold some VOO.